People, those are the core of who we are and what our business runs on.
So we're talking about stocks versus real estate. What are your thoughts there?
So I think a well-rounded portfolio is intelligent. I would advise one to pursue that. However, I personally lean more towards real estate investing. It's for a few different reasons.
Sure.
Number one is I'm a bit of a control freak.
Yeah.
And I like the idea of having control of my asset, right? So I can't control what Tesla does. I can't control what Amazon does, right?
Sure.
So the decisions that people that I'll never meet make would affect my stock portfolio.
For sure.
That is a little disconcerting to me. However, if I own a multifamily home, I actually have control of that asset. I can add more units. I can renovate. I can add more parking. I can get creative with income streams. So I like the idea of being able to have my hand into how valuable and how much cash my asset produces.
Yeah. You can meet the tenants.
Mm-hmm.
You can know there's a lot of pieces there. I do like the tangibility of being able to drive by a property and just know that it's, hey, this is my investment property, my little slice of portfolio. I think there's also a lot of I've mentioned before the being able to depreciate properties.
Mm-hmm.
And certainly the stock market goes up in value, but you can't depreciate your stocks. You also, I think the big thing is if you want to go buy $20,000 worth of Tesla or Apple or Amazon, you have to have $20,000 to exchange for that amount of shares of stock. Whereas I can have $20,000 and use it as a down payment and use the bank's money. And then if that appreciates, I can take an equity line out of the property or pull it from my whole life policy. There's a lot of different scenarios where on a $400,000 property, I don't have to have $400,000 to exchange it.
Right.
Whereas if you want $400,000 worth of stock, you have to pay $400,000.
Mm-hmm.
And I think that's not really feasible for most people.
Yeah, it's so malleable, right?
Mm-hmm.
Yeah. So talk to us. We are not tax professionals, right? We are not CPAs, but talk to us a little bit about depreciation. What does that mean? What are these tax advantages?
Yeah, it's like a whole nother conversation, but it's like you can do cost segregation and accelerate the depreciation down to 5 or 7 years on a property versus it being 18 or 20 plus years, depending on if it's residential or commercial. So like the office buildings, a 27.5 year depreciation, I can do a cost segregation on it and make it a lot lower than that and get the tax benefits in the first 5 years, say, versus having to wait 27.5. For other people that are just buying a buy and hold property, you get to depreciate all the things that you fix up on that property. There are just a lot of additional little tax advantages to that versus the stock market.
Yeah, your interest, right?
Your interest.
Your insurance.
Yep.
If you have a property manager, that depreciation that just automatically comes out.
Yeah, so a lot of extra little bonuses.
Mm-hmm.
Yeah.
Great.
Yeah.
So stocks, amazing. Real estate, amazing. But here at the Anderson Group, we lean a little bit more towards the real estate
we're biased. And we're also in the business, and it's like, you should invest in what you know.
Mm-hmm.
And if you don't know, get with a real estate professional like ourselves, and we'd love the opportunity to answer questions, be a resource. Click below and subscribe. Leave a message. Let us know how we can help.